Well, it's time now for business news with Kate Moody. We saw a big new player hit the trading scene on Thursday as Weibo made its debut on the Nasdaq. How did it fare, Kate?
Well, it wasn't quite the bombshell that Weibo may have hoped for, but it wasn't a bomb either, you might say. The micro-blogging site saw its shares up 19% on its first ever day of trading on the Nasdaq. Weibo is the third Chinese company to list in the US this year alone, but it certainly won't be the last. Catherine Clifford reports.
A lukewarm start for Weibo as it made its US debut, but share prices did pick up. The Chinese microblogging platform ended trading on Thursday at just over $20 after opening below the subscription price of $17, making a 19% jump.
Obviously, I'm very happy, and especially given the market, has not been doing great in the last couple of weeks, and I think the performance has been terrific for us.
Weibo is often described as a Chinese clone of Twitter. However, this debut paled in comparison to Twitter's 73% stock jump on its first day of trading. In all, Weibo raised $286 million, despite estimating the value of its IPO at as much as $500 million last month. Weibo also intentionally sold fewer shares than planned. It's facing increasing competition from rising local rivals like WeChat. And Beijing's fierce crackdown on social media has seen posts on the site drop dramatically. All eyes were on the debut ahead of Chinese online giant and Weibo's co-owner Alibaba's much-anticipated plan to file for US IPO.
Alibaba is the e-commerce ecosystem in China, and we are sort of the social mobile platform in China. Together, we really want to create something big in the mobile social commerce area, and we're already in the progress.
It's thought Alibaba's debut could raise as much as $15 billion. It would make it the largest internet company IPO since Facebook's $16 billion one in 2012.
Now, that did give a bit of a boost to Wall Street on Thursday. The Nasdaq, which hosted that new IPO, closing in the green. It was actually the last trading day of the week in both the US and Europe. Markets are closed this Friday to mark Easter weekend. We saw a mixed day of trading in Asia, Tokyo closing up, shares in Shanghai falling there. This is the Chinese government said that new home prices had risen 7.7% in March, which could indicate a slowdown for the property market there.
Right now, Kate, in Dublin, we've seen the very first convictions related to the banking crisis there, haven't we?
Yeah, two former executives of the Anglo-Irish Bank have been found guilty of fraud. Patrick Whelan and William McAteer were convicted on 10 counts of making illegal loans that were designed to prop up their ailing bank's share prices. Now, that same jury in Dublin earlier this week acquitted the former chief executive on similar charges. Anglo collapsed in 2009, costing Irish taxpayers more than $30 billion and leaving the Irish economy on its knees. Let's move on to some of the day's other business headlines now. In the US, the man who oversaw the cleanup of the Deepwater Horizon oil spill has reached a deal to settle charges of insider trading. Keith Seelan, a former BP employee, was accused of selling $1 million worth of BP shares after receiving information about the severity of the 2010 spill, information that was not publicly available at the time. BP shares fell almost 50% once the magnitude of the disaster became known. General Motors has reported a 2% increase in global sales for the first 3 months of the year, with 2.42 million cars and trucks sold. Strong demand in China balanced out a dip in sales at home. The U.S. company has seen its American sales slide after being forced to recall 2.6 million vehicles over faulty ignition switches. And if you like Lucky Charms and Cheerios, beware of what you're giving up. The food giant General Mills has rolled out a new privacy policy which makes it illegal to sue the company if you've engaged with it in any way. That could include following the firm and its brands on social media, downloading or printing a coupon, or redeeming any promotions. General Mills owns dozens of brands, including Betty Crocker, Yoplait, Haagen-Dazs, and Pillsbury.
Well, finally, a company in China has produced some unusual houses. Not only do they cost less than $5,000 each, but they've also been made by a 3D printer. Tell us more, Kate.
Yeah, these are being produced by the Shanghai Winsun Decoration Design Engineering Company. They've created 10 three-dimensional houses, each taking less than 24 hours to construct from a 3D printer. The pieces were printed separately from high-grade cement and glass fiber, and then they were assembled, each house costing about $4,800 US. No word yet on any prospective buyers or who might be moving into these structures.
Definitely interesting stuff. All right, Kate, thanks very much for that business update for us this morning. Let's